Good morning. It is Friday, October 4th, 2024, and this is Option Pit Live. I am Mark Sebastian, your only option, and I am joined by one Licia J. Leslie, the queen of the candles. Good morning, Licia.
Good morning. How are you today?
I'm doing great. You know what's doing great is non-farm payrolls. The economy added 254,000 jobs in September, above expectations of 147,000. U.S. unemployment rate ticks down to 4.1%, below expectations of 4.2%. Pretty darn strong numbers, Licia.
Until they're revised.
Fair. Yeah, I haven't seen any update on revisions or anything along those lines for past. We've seen that in the past, just about every non-farm payroll has been adjusted. Oh, here we go. July was actually revised up from 89,000 to 144,000, and August was revised up by 17,000 to 142 to 159.
Well, that's good news.
So the revisions were actually, we haven't seen upward revisions, but pretty incredible. I haven't seen the one thing I'm interested in is, here we go. Average hourly earnings were up 0.37% or 13 cents an hour to $35.36 an hour, up 4% year over year. So all in all, pretty bullish numbers. On that news, but prior to the announcement, we had seen S&P futures up about 17. We got a big push higher. We were up as much as, we were up as much as 36 points. And now we're up about 26. So we're still up, but not nearly as much as we were. But, prior to the Fed dropping rates, we might have actually been down on this positive news. Good news appears to be good news again. What's your take, LJL?
What's my take? Well, the charts show us sitting at support, so the charts don't lie. Well, they can, but I like it. Good news. The bull market the trend is still there. Pullbacks are healthy. And we had just a little mini pullback. So looks like we're marching higher.
I think mini being the word. I don't know how you even call that. That was barely a pullback. But a pullback it was. So there's the S&P currently up about 30. So call it 0.5%. NASDAQ futures, they're liking it too. They're up almost 0.75%. NASDAQ futures are over 20,000 to 20,151. Pretty impressive, 0.8%. So there's that. The VIX futures are off 4%. VIX futures, the October futures still above 20, but we do have a pretty significant drop in volatility to at least start the day. I guess they were a little more worried about that number. Right now, they're telling us the VIX is about 19.3, closed yesterday at 20.5. So they are so far so good. They like this number. If you're a market bull, this is happy news. But the one thing I question is, what did a 4.1 rate? I think this puts more pressure on CPI, on the next CPI print, because the market is dying for a, another half point rate cut, which I still think is silly. But I think this almost locks in that we're only going to get a quarter point.
Well, I've been reading a half by the end of the year, so we'll see. I think people need inflation relief is what they need.
Agreed. 100%. Speaking of inflation, the one area we've been kind of watching the market flounder, except for one major sector, and that's been energy. And it's been a combo of it's been a big combination of geopolitical events. I can't imagine this strong of a report is going to be bearish for energy as well. Crude seems to have finally found a floor and it seems to be taking off. What are you seeing in crude oil?
Crude oil, light crude futures have held my support level at 67. That's been there for a really long time. Going back to March or December of 19, the support level sits there. So that's a very important level. 67, everyone should have that on their chart. Made a double bottom, cleared my median line. I just wrote about this last night, and they're on their way higher. 78.30 possibly.
Yeah,
80,
I mean,
possibly 80. Yes,
they've gotten
they're
pretty darn
finally
depressed.
rallying.
They've gotten pretty darn depressed.
Yeah, since July they've been down.
Which
I'm
is
sorry,
funny.
April.
Which, in summer is usually isn't summer usually cyclically bullish for energy?
Had a little bit of a pop in June, but not much.
Not a lot of love there. The other energy source that has been obviously moving with oil has been natural gas. We are seeing some strength out of nat gas over the last few days as well in the energy complex, and it has not been nearly as violent, but nat gas appears to be kind of breaking out.
Also double bottom. Looks bullish, looking bullish. I need a new pitchfork in here.
Let's see what. Now, when you draw a pitchfork, if you're doing a bullish, you go high, low, high.
Yeah. No, if you're doing bullish, you do low, high, low.
There you go, low,
Get
high,
an
low.
ascending. Yeah, looks like nat gas according to this pitchfork, 1783. So another dollar or so.
That's pretty bullish. We had a huge
That lines
trade
up
go
with
up.
these guys.
I don't know if you saw this. We had a huge trade go up in a nat gas company yesterday, EQT. So EQT is vertically integrated nat gas company, and they sold the stock's $37, $37.50. They sold 25,000 of the 32 puts and bought 25,000 of the 40 calls
Oh,
in
nice.
EQT. That is, and when I look at the statistics, the total open interest, I mean, the average daily volume is 6,000 contracts in that thing. So 50,000 contracts is a 10x trade.
Yeah. Definitely looks, the median line comes in just below 40.
Yeah.
Looking bullish.
Absolutely. So, the question I have with all of this, obviously there is a lot going on geopolitically. When you look at oil and you look at the move that it's had, the question people are going to ask is, okay, is this because oil is actually rallying, or is this just geopolitical fears? Nat gas doesn't really have the same kind of Middle Eastern exposure. So when you look at oil versus nat gas, what's your take on how much of this rally is geopolitical and how much of the rally is, a real rally? Hey,
There's Andrew. Oh, we do have sound too.
Wow, we have sound. We have everything.
yes,
It's good to hear that it's all working.
yes.
Welcome, Andrew.
Thank you. Thank you.
Nat gas, I'm not sure on, but crude, the Middle East tensions have been going on for months. So
Yeah.
it's hard to put it on that, even though I don't know. Honestly, I don't know. That's all I got to say. I don't know. Who knows? I mean, they've been fighting for months, but yet crude was getting hammered the whole time. Now suddenly they care about it. So I don't know.
Well, you put some Iranian oil fields in the crosshairs, and things change a little bit.
There you go. But wasn't that always in the cards, kind of? I mean, anything's. I don't know.
Well, it's like when you threaten. It's like when you threaten your kid to take his phone away, and he still acts like a jerk, and then you actually take his phone away, and all of a sudden, then they're apologetic. It's kind of like that.
Don't you think the delta's higher though than when it was? Like before, you're like, okay, it's like a 10 delta. Now it's 30.
Yeah.
35.
So I would say that the violence of the rally over the last couple of days is probably attuned to some of what we've seen in Israel and in Iran. But when you look at what nat gas has been doing, you got to say crude was gonna make this move regardless. That would be my take, especially if we're gonna have a soft landing. If we actually do have a soft landing, $68 a barrel crude is just ridiculous. That's not gonna hold.
Yes.
Speaking
We've
of
been talking about the soft landing for a really long time. When do we know?
That's the thing about a soft landing. You don't know that you've got a soft landing until you're done having a soft landing.
We've been talking about that for a while. How long now?
November 7th. That's when we'll know. November 8th.
Yeah, you don't know. The thing about soft landings is you don't know you had a soft landing until you've already had it.
Yeah.
Right? It's like they don't tell you that we were in a recession until we're under rare circumstances. Do they tell you that we're in a recession until the recession is already kind of
halfway over?
Yeah. Now there are cases where like you just know, right? Like the financial collapse, 08, COVID, things like that, where it's just like, okay, 2001, like it was obvious, right? We're already in a recession. This is a little different, but my feeling is that there is, I don't know if we're going to come out full on recession, but we're definitely in a slowing growth period right now, which would be what a soft landing is. Speaking of soft landings, Andrew has softly joined the group. Andrew T. Giovinazzi, the Viking of Volatility, the Vicar of the VIX. Welcome to Option Live, Andrew. You're coming to us from beautiful, from the Carolinas, correct?
Yes, very, very western North Carolina.
All right. Well, welcome.
Thank you.
So Andrew, with all this talk about oil and energy, I wanted to ask you about option fingerprints around some of these oil names, because you, me, Licia, we've been lamenting that some of these names like Occidental and Devon and Apache had just gotten so cheap and had just stayed cheap for so long.
Well, I did find a little bit in Exxon. I think if Lewis has the ability to post them, I did.
Yeah. So first off, remind everybody what is an option fingerprint.
Sure. So the backstory kind of is when I was a younger trader, very younger trader, they listed long-term options. We used to only have, the serial options. So institutions wanted long-term options, like they've been wanting variance swaps right now. I know that's like but like institutions want products, and then the exchanges try to create them. So 34 years ago, 35 years ago, they listed long-term 1-year options, which we call leaps. But the serial terms, and they've done more now, but generally they are like January 2025, 2026, 2027. So when an institution wants to buy a long-term call, they'll look at leaps because they don't have to close them, basically. So one thing I've been, over time, just kind of looking at how things trade for a long time, I have found when stocks do well, there tends to be accumulation in long-term options. So, so when they bounce, I look for, okay, are they buying more long-term options? So are institutions kind of getting in? So this is Exxon. So
And here's a fun little thing.
Yep.
A lot of people don't know this. Leaps is actually an acronym
for long-term.
So no.
Oh.
Can anybody tell me without cheating in our audience what the acronym is that LEAPS represents? What does that actually stand for? Andrew already gave you the first word, so you've got that. So Andrew, yes, we're looking at some LEAPS call action here in ExxonMobil.
So Exxon's a couple things too is there tends to be less long-term action in stocks that pay dividends because institutions like the dividend. So there generally is a little less relative to the float than you would be like a Google or Amazon or something like that would really pay a dividend. So here, this is Exxon on the top is June of this year. It was trading 110. Like there is some, again, open interest for a long time, over a year and a half, where the investor doesn't want to sell the call. They just want to be long. And you can see, fast forward to this or yesterday. So that on the top screen, the open interest sort of in the money, meaning I'm long a call, I've made some money, and I ain't going to sell it. Simple is the simple way to think about it. Then all of a sudden, what you're seeing is compounding open interest in the last 4 months. So more institutional buying and holding of options, and we're only up $10 in Exxon, and there's a lot more long-term open interest. So even a stock that pays a dividend, you're seeing a little more accumulation. Again, just from like practical experiencing these things, institutions tend to buy the long-term options. They don't sell them. They sell short-term options when they want income, and they buy long-term. So when you see accumulation, think of it like this. In order for stocks to go up, institutions have to buy them. So right now, I'm seeing a little bit of accumulation in Exxon, not a ton, but I think it's definitely, I would say, positive. And you have to think oil stocks have not really made any new highs or anything really reasonable since 2022. So as we all know, the market can surprise us very easily the other way. All of a sudden, like, oh wow, oil prices aren't going to zero, so everybody's going to be climbing back into oil stocks.
The funny thing is like when I was up to like most of my time on the floor, the two biggest companies in the world were ExxonMobil and Chevron.
Yeah.
And now look, they're not. I don't think they're even top 10.
Mm-mm.
So when people I like to warn people, like people are like, well, I like the concentration in the S&P 500 because I'm getting the best companies in the world. I'm like, the best companies in the world change, and other ones can be left in the dust. It's crazy. So ExxonMobil, I see those footprints. That's that large and growing open interest on a relative basis of in the money and at the money options in the LEAPS contract.
Yep.
So
it's definitely solid, and it's only 3 or 4 months. So again, this is only one thing I use, but I would say it's positive. It's definitely not negative. So folks that own their calls, they're not getting rid of them for Jan 2026. So now that's the strikes I'm looking at now or the term is Jan 2026. The 2025s are soon. There are people looking to roll those, relatively soon.
All right, Licia, when you look at Exxon, what do you see in the charts here?
It has a double bottom also, along with the others. Cleared its most recent high at 120. So that 120 level is going to be a really powerful support now. And it's clearing these highs from back here in April. I'd say, yeah, definitely 128 at least.
There you have it. ExxonMobil going higher.
Have you guys done bonds yet?
What's that?
Have you guys done bonds yet or TLT yet?
We've
No.
not done bonds. They are moving this morning.
TLT, I told everyone you gotta wait until 98.86. A close above that before going long. And sure enough, it failed. They're testing this previous low, 96.5. Below there, 94.72.
Wow, this is a new low. So by the way, this should not be happening, right?
Well, no, the 10
Right.
year is getting slaughtered right now, on a relative basis.
But I thought they're lowering interest rates. Shouldn't bond prices be going up?
Isn't that buy the rumor, sell the news?
Well, I mean, look at the rally that interest rates had already had.
Right.
So I think
so.
they got a little overbaked, and
Okay.
they had I think they'd kind of overpriced in some aggression.
Yeah, because we have a little TLT strangle action going on. It's going to pay today in our OP in our Monday show, the ticker highlight show.
Awesome.
This is why we covered TLT. Thought it'd be interesting. I think long term over the next, when you look at rate cutting cycles, over the next year, TLT is likely to be higher, but near term, it is definitely in a soft pocket.
Also, flight to safety with the whole Israel-Iran mess over the weekend, and they're selling these off into the weekend. I'm not going to say there's a little less worry then if they're wholesale whacking these things, but now I think the soft landing is catching more, at least for market action.
The market is always going for the rosiest case.
Yes.
Almost unilaterally. So there's that. Speaking of that, one of the things we've been talking about is this sector rotation. We've seen Apple kind of pull back a little bit. We've seen Nvidia kind of stop going up. The rest of the Magnificent Seven look a little bit softer. Energy, if you look at yesterday, energy was the only sector that was really bullish until the end of the day. We're seeing some pretty interesting sector rotation. What do you think? What do you see out of are there other areas in different sectors that you see a lot of these footprint patterns showing up? Is it random, or are there specific sectors where you're seeing them kind of go whole hog? Let's buy some long-term options here.
Oh, I haven't seen anything in particular per sector.
Okay.
I have seen there's a little bit of accumulation in some of the payment processors like Square and PayPal.
That'd be financial services.
Right, financial services. And usually, again, banks, Square and PayPal are not real big dividend payers, but I don't have any slides for you on those. But normally banks are dividend payers, and they have a little less footprint in general. But a soft landing is good for all the financial services companies. So
I mean, if we get a soft landing and the interest rates falling, so banks like interest rates high, And banks like interest rates steady. If interest rates are falling, their spread is widening. So they're actually in line to make a lot of money. So what banks do, they're the first to lower your rate on your savings account and the last to lower your rate on your credit card.
I don't think they ever lower the rate on the credit card.
I don't
It's
think
criminal.
they do lower that.
I think
I'm
it's
not
criminal.
sure. I'm not sure that they do. That's why you
I don't think they do.
That's why you shouldn't carry credit card debt, folks.
That's right.
It's
As traders, we were forced that way.
Yeah.
Yeah.
So the spread widening is pretty good for banks. If we're gonna have a soft landing, there's some interesting ones. Licia, when you pull up XLF, do you see anything interesting there?
Consolidation. Consolidating. Needs to break out just above where it is now, like 45.5 to trade back up here, 46.25. But yeah, just consolidating.
Oh, oof. Ken Stein wants to know, hey, what about gold? And I just looked, and gold is getting a little bit of a slap today.
It's had a bit of a run.
Still very bullish. Still a very bullish pattern. These lows, right where it is now, it will be support, those previous lows. Below there on the futures, 26.12. Still a bullish, very bullish pattern in gold. But I believe the dollar's catching a bit, isn't that?
It's crazy.
Look at the dollar take off. Up against resistance here. But yeah, the dollar's just made a huge move this week.
It's weird that the dollar's rallying in the markets. The market is not sold off more than it has. You don't usually see a dollar rally like that, and the market going.
What are we down? 0.5% from the top,
yeah,
1% from the all-time highs.
I mean, guys, when you've seen a violent rally like that in the dollar, what has usually happened to the S&P 500?
You get smacked?
Yeah, not this.
Yeah. I mean, I think there's a lot of relief here today on, okay, you got the soft landing going on. The strike, the big strike is done. Nothing's happened Israeli-Iran yet to make things worse.
Yet being the key.
Which is, I think, why, VIX has come off a little bit, but not very much. You would, like, all of these numbers over the last couple of weeks have provided, well, until about, 2 weeks ago, provided pretty decent, pretty decent pullbacks. But it's nothing like we don't expect getting a long-term drop in VIX again. I mean, I would assume till after the election. I don't see how, VIX drops below 18, let's say, before the election.
Oh, I don't think the election holds it up to 18. I mean, we're 1887 right now, and we have Iran the Iran-Israel thing hanging out over the weekend.
Okay.
I think the base case for VIX ahead of the election is somewhere between 16 and 17. 16 and a half, something, call it that. But which leads me to kind of what I wanted to talk about next as a group, because people want to know, all right, we have the weekend, right? And I think a lot of people you're going to see VIX is currently down to 1880. I believe it is going to get a bid as we head toward the close, because people are going to be worrying about what's going to happen with Iran and Israel. So what do you guys we can kind of go around and see what people think. What is kind of the best case, worst case, and base case? When I say base case, like the most likely scenario to play out in your guys' eyes over the weekend. Andrew, you want to go first?
I mean, I think, to be honest, I don't think anything happens over the weekend. There's going to be a measured response, and at that point, and then I think vol maybe 6 a little bit, but they're going to take their time and they're going to choose something that is meaningful. So again, that would be my speculation on that. So as much as we're used to kind of a fast retaliation, I think it might take a little more time, but that's what I would think for as far as the weekend goes. And we'd have a little bit of vol relaxing, but you're going to have this weird tension because you think about it now, there's not a lot of natural sellers of volatility. I mean, in general, when you have this sort of thing hanging in the background. So it's what I call like jello markets, where you have, you push your finger into the jello and sort of move the market around if there's any real volume. So I think that's what we have on it right now.
Licia,
Worst case is things really, really get out of control. A British tanker was hit from, I believe, I don't know how recent that was, but I just read it, that a British tanker was hit by the Houthi, I think.
Yes.
And I mean, we start doing things like that. It's escalating could be, obviously is the absolute worst case. We don't want that. We don't need that. I don't think anyone wants that. And like you said, the Iranian oil spots being bombed, no one wants any of that, right? Maybe, I don't know. I hopefully cooler heads prevail and we can get a grasp on all this, but they've been fighting for thousands of years. Why do we think that'll stop?
Well,
so,
the interesting thing is that, the Iranian regime is not exactly popular.
Isn't exactly what?
Popular.
No, of course not.
It is, my neighbor across the street is Iranian, and there is a big difference between people from Iran and people from the rest of really that entire region, because they're Persian, they're not of Arab descent. So it's culturally very different. The populace is educated, by and large, and so it is an entirely different scenario than getting into a fight in Yemen or Palestine or even Lebanon. I would say that the base case for me is Israel takes out, some military targets Iran's nuclear research facilities, things like that. The best case is maybe they take out just a couple missile silos and something like that. I mean, the best case is they find I suppose the best case would be like they just fire a couple missiles at a couple of small targets and say that's enough, or even say we're not going to bomb Iran, we're just going to take out your people in Lebanon. The worst case would be torching the oil fields, or worse, right? Like, if Israel decides to bomb Iran back to the Stone Age, VIX is going to go to 30 really fast, and oil is going to be $90 before you can blink.
Right.
So my general feeling is that a 20 VIX should be shorted, because vol, when we've looked at the movement in the market, volatility has not been. We have not had any market volatility, right? Look at the last week; nothing has happened, and the VIX has just gone up and up and up.
Yeah.
And the reason why is because this kind of a 3-layer, right? Base case of the election for me, probably about, we'll just say 16.5.
Mm-hmm.
You had non-farms, which were adding at about 0.75%, and then you had about 3 points of vol built into VIX purely from Israel and Iran. And if that thing comes to even a remotely not worst case scenario solution, they're gonna plaster volatility. The issue is, as great as that sounds, if the worst case happens and you're short volatility,
yeah, it's a big question mark.
You got a real problem on your hands.
Right. It's a sad but necessary binary switch for
Yes.
the market.
So it's Friday. We got a few minutes left here. What are you guys planning on kind of doing today as traders? What are you going to be looking to kind of accomplish? I know it's a weird question, but every day the market kind of presents itself in a certain fashion, right? Right now, S&P futures are up. The Nasdaq's up 1.75%. Bonds are down. Wow, bonds are down 0.2%. That's a pretty strong move for bonds. The S&P futures are up 85 basis points. Dow futures are up 0.6%. Russell 2000 futures are up 2%. And VIX futures are off 0.75 of a point. What is going to be your approach to trading today?
I mean, I'll start. I think we wait to see how this euphoria happens, because like you said, there's two layers to the underlying. I guess, it's a good underlying number, better than what people hope. So we're back to all-time highs. And then by the middle of the day, everybody realizes, okay, what's going to happen this weekend? So I think we've had the same back and forth, and that's why the market doesn't go anywhere. Because as soon as you have any reason to be really happy, the kind of sadness from global events come in. And then when any kind of adverse news, there's no follow through, kind of like the longshoreman strike, right? Everybody's like, oh, we're going to cripple the economy. And then, okay, market sold off a little bit on not great news. And then the longshoremen got whatever, they got a huge raise, and then all crisis was averted. So from a market point of view, I think on Friday, sometimes when you have these early rallies, relief rallies like this, it could go on all day. And then, you kind of see where the dust settles on Monday. But I would be surprised if the rally actually held up today.
Yeah, I don't want to
without any change in the global backstory, so to speak.
I'm not fading it till it starts to fade, though. I'll tell you that.
Right. Let the price reveal itself. You have to wait. This is pretty strong right now. I have a recommendation. If you're late to the game on crude, Halliburton, there's some cheap calls in Hallie. I think it could trade up to 33.
Oh, I like that.
I like
Look at the OC 18 expiration. 31 calls are a good deal.
Halliburton looks cheap, and I've been seeing some bull action in Slob too, Schlumberger.
Oh, really? Any big money flow style?
Yeah. Actually, the one they were all over was yesterday was Occidental.
I mean, isn't like Halliburton at a 2-year low? Can we chuck a chart up of that just for interest?
Pretty low.
Oh yeah, Halliburton.
That was on my it traded 1-year low and then looking ready to bounce.
It is right. It is. It had a similar bounce
from July of 22.
Yeah, it had a similar bounce that kind of fizzled on the 24th, but this one's breaking the 50-day. It broke the 50-day yesterday, and it's holding it today.
And it's got a double bottom. Yes.
So it has all the hallmarks. Again, it's not going to do an AVGO and go up a 5x, but there could be, certainly for super cheap calls, it could be a nice little vehicle for you get a $1-2 pop and your calls are up
100% for sure. They will be.
That's, buying cheap stocks, all you need is $1 or $2 move and your calls are worth a lot of money. So
exactly. The OC 1831 calls.
I like that, Licia. That's a pretty solid one.
Yeah, I think I like nat gas plays a lot right here based on what I'm seeing in the paper. I think energy has a second leg up, whether we have war or not. I think the Iran-Israel thing has sped up some of what was going to happen in energy, but I think energy is going to move regardless. The move in the Q seems a little bit overstated, especially in Amazon, though. You know what? I am going to be trying to go long is Amazon. I should have bought it yesterday. I'm really annoyed with myself.
There's a lot going on yesterday. It's a lot going on yesterday.
It's up about $4.50 this morning.
It does feel very relief-esque, all this immediate buying. As far as the trade goes, from a vol trade, just straight November strangles and VIX. I mean, you have huge potential. 16 puts are super cheap. 20, 30 call spreads really cheap. We were almost backward yesterday for a while, so leaning into that a little bit. Like you said, it's like you said earlier, it's very easy for VIX at this point to just light up and go above 24 if it wants to. It doesn't take much.
I know we've been talking about Flash 10 a lot, but this market sets up really nicely for a two-way trade out of weekly profit cycles, really nicely. So I may join in. I may join your room and see what you're up to today, Andrew.
Well, you could do that.
It's no, just from the audience. I won't happen.
Friday at 2:15. So
yes. So all right. Well, it's now we're kind of coming up against it. S&P is up 47 points, 0.8%. Yesterday S&P closed below 5,700, 56.99, 97 in the most BS end of day move I've seen in a while. I wanted to break something when that happened, but that's a different story. So what do you guys got for the end? What do you guys got for the rest of the day? Andrew, you're thinking we might fade.
Yes, but I would not. I think this is a good time to leg the vol trade. Yeah. Start the leg with your long call or call spread in VIX, or even like a straight butterfly at this point, because I don't think they're going to cost almost anything. And then buy the put maybe at the end of the day or next week.
There you go. Licia, what are you thinking for the rest? What are you thinking for the day?
I'm thinking you watch the previous highs. Obviously, 57.50 is a key resistance level. Above there, it'll be these previous highs. It's 57.67. I agree with Andrew. I don't think everybody goes home all at those tops. We probably end up on the day, but probably not up 50.
All right. Well, we're definitely going to go scream 4% because I agree with both of you, which means buy YOLO calls. If all three of us are like, yeah, it's probably
buy the 5800s for today.
All right. Well, folks, we are up against it. So for Andrew T. Giovinazzi, the Viking of Volatility, who will be launching his Flash 10 options today at 1 o'clock Eastern time. If you haven't joined, do so. These are your ability to join Andrew on recovering stocks. These are quality companies that at one point were high flyers that have been kneecapped, but he's seeing them recover, and he's seeing the option footprints telling him institutions believe they're going to recover. And that starts today at 1 p.m. Eastern time.
1 o'clock.
Yep.
We're waiting for a week and a half, so everybody can get the dust off their shoes and get kicking.
And of course, for Licia J. Leslie, the Queen of the Candles, who has been crushing it on her own in Option Shopper. I am Mark Sebastian. I am your only option. And I hope you folks have a great trading day on Friday and an absolutely wonderful and safe weekend. And we'll see you next week. Every Friday, 8:30 a.m. Eastern time, Option Pit Live. Have a good one.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.